Hello, I'm Sarah Spencer and I'm in the Reading office at XPS Investment. I'm joined today by Alistair Gill, who's the Head of Equity Research in XPS Investments. I'm going to be discussing with Alistair his outlook for markets in 2021 and the impact he believes this will have for UK pension schemes in particular. So firstly, Alistair, what do you believe are some of the key investment challenges facing investors in 2021?
Thanks, Sarah. For pension schemes, the key challenges for me are how to protect their schemes from the economic fallout of the COVID pandemic, which is likely to persist for some time yet, as well as the impact of Brexit on the UK economy. The other key variables I see requiring attention during 2021 is how the regime change in the US is likely to impact global markets, as well as where to invest when most bond yields are at or around all-time lows, and equity market valuations have become pretty stretched.
I noticed you mentioned two big factors there, COVID-19 and Brexit. Which of these do you think will be a bigger challenge for investors in 2021?
Good question, Sarah. In the short term, it's quite difficult to disentangle these two major influences, but I think there's no doubt that the sheer size of the market interventions by governments and central banks in the wake of the COVID pandemic has had the largest impact in the short term. We are seeing some frictions in our trading with the EU, which is starting to put up costs and trade barriers in certain sectors. And this could well increase as some of the short-term easements fall away during the months ahead. Some of these impacts could be inflationary and could harm the value of sterling. So trustees do need to remain vigilant and ensure they have sufficient risk mitigations in place, such as inflation and currency hedges.
You also touched upon Joe Biden becoming president of the US. What impact do you believe this will have for UK pension schemes in particular?
Well, Sarah, it's really interesting to see the priorities of the Biden presidency. I expect some policies to remain the same, such as the more robust attitude to trade policy with China, for example. But much has already changed. I noted on day one of his presidency, the number one priority behind the huge $1.9 trillion COVID relief package was climate change. It was widely reported that he signed an executive order rejoining the Paris Climate Accord, but that day he also signed an order halting the building of a shale oil pipeline from Canada to the Gulf. I think this will be the start of many material climate-related commitments which we will see from President Biden, and of course the issue will be brought into sharp focus when the next climate change conference, COP26, starts in Glasgow in November. We're already helping trustees investigate low-carbon investment options for their portfolios to manage climate change risk more actively, and we expect to do much more of this in the year ahead.
We've seen a large amount of central banking stimulus coming into the economy, and equity markets appear particularly buoyant. Do you think, therefore, that markets are getting ahead of themselves?
With global markets close to or at all-time highs and price-earnings ratios of around 30, many commentators believe that the market has got ahead of itself and is discounting too strong an economic recovery. However, much of the rise in markets has been driven by the tech sector, and others argue that the strong performance of companies such as Amazon and Apple during the year do justify a high rating. I do believe, however, that some of the stories of bulletin board-based investors bidding up stocks, as we have seen recently, do feel like tales from a late-stage bull market. And so although we don't know when a pullback will happen in the markets, it's important for trustees to stress test their portfolio's resilience to an equity market downturn.
Thank you, Alistair, for sharing your insights today. To close, do you have any key messages for trustees in the year ahead?
Well, thank you very much, Sarah. Some key messages for trustees? Be vigilant in managing inflation, interest rate, and currency risks in your portfolio. Tread carefully in equity markets to ensure you can withstand any short-term impact of a downturn. And finally, consider how to position your portfolio both to reduce climate change risk, but also benefit from the transition to a low-carbon economy.